About to talk about investment management, gender and DEI performance in ESG funds. So essentially, yeah, I'll be moderating, so I won't be speaking on this one as much as the former one. But we just talked about the value chain and the supply chains, and now we're going to talk about all of the same topics, but from the investment world. Because we can have big effects in the supply chain with the companies, but we can also have a lot of change from the investments. And this is essentially what we're going to talk about right now. We have a great panel here. I know we're a little bit behind schedule, so I probably will just ask you all to very quickly introduce yourself, and then we'll get into the question and the topics, because we are under time pressure. So maybe first over to you, Carolina, if you just want to say who you are and who you're from.
Thank you very much. I'm Carolina. I'm the asset manager who joined technology, the fintech, to accelerate the transition. And so, linked to the topic before, my obsession is to effectively get the investors to increase the pressure on companies to transition. And so, this is where technology, AI, cloud joins the data from your side to construct portfolios that reflect preference and values. So, the famous SDGs. And targeting the next gen and the women that are more keen to invest more on purpose.
Hi, my name is Nina Fischer. I'm a lawyer with Simmons & Simmons, based here in the Dubai office. I've been in the region for 4 years now, having previously been in London, and my work focuses on working with international asset managers who are looking to do work in the region or set up in the region and their regulatory compliance. And Simmons & Simmons is also a member of the Dubai Sustainable Finance Working Group, where we're looking to integrate ESG into best practices in the finance sector in Dubai.
Good afternoon. My name is Nikita Singhal. I'm the co-head of Sustainable Investment and ESG at Lazard Asset Management. We are a $220 billion global asset manager with a number of strategies that integrate ESG across the investment process. And then most notably, we have a global gender diversity strategy called Minerva, where we believe we can push companies to have higher levels of gender diversity while still investing in very high quality companies that have strong levels of financial productivity and cash flow returns on investment.
Hi, I'm Mary Jo Wilmore. I'm with New Energy Nexus as their Global Investment Development Director. I'm also a very active member and former co-chair of the Northern California chapter of 100 Women in Finance. And 100 Women in Finance is a global organization of about 25,000 members now. We're in 32 locations. And today is the launch of our annual Fund Women Week for financial investors to take a look at women fund managers, looking at CIOs, and excited to have this conversation about what we can do to fund more managers or have institutions do it, which then they will fund the companies that women are in. It just kind of, and their track record is that they are then investing in things that are better for the environment with a lower carbon footprint. So it kind of hits all things. So thank you.
Hi, I'm Justin Fishkin. I'm here as co-founder of Future Of, which is a venture firm focused on the future of sustainable industries, so primarily materials, manufacturing, energy, and mobility. I'm also the Chief Growth Officer of Citizens Companies, which is the parent company of Supercool, this beautiful space that we're all sitting in, and I'm really excited about this conversation.
Perfect, but then I guess we can get started, and I'm biased, but this is my favorite topic because I used to come from Moody's, the rating agency, and sort of again seeing what we can do with investments, and once we start changing the capital flows, we start changing behaviors. Maybe to kick us off, and it's because, I want to talk about some data. We just did a new big analysis of 300 US ESG and sustainability funds in the US and how they have invested their money from a DEI and gender perspective. And some of the findings, I would say, was a little bit shocking because it is sustainable funds, and there was less than 4% of this money that had been deployed in companies that were led by a woman, versus if you had invested in MSCI World or MSCI Acqui, you would have gotten 7%. So by investing in these sustainable funds, you're actually undermining, you could say, the flow of capital to goal number 5. Also, there was around 28% of the companies that has been invested in we're in the bottom quartile from a gender perspective. So we're going to keep it on gender given the theme of today. But just maybe, I don't know, Nikita, if you would kick us off around some of this. How do you think about these things with ESG, sustainability, but also then the lens of gender, and where does it sort of fit in? Because we have 3 letters in E, S, and G, and it's a big question, I know. But
it's a great first question, because I think we often assume that ESG or sustainability is a monolithic concept, and that somehow there are companies or institutions that are good at ESG and others that are bad at ESG. But I really firmly believe, having done this for over 15 years now, is there's no such thing as good ESG or bad ESG. It depends on the individual issue. And so companies that can be incredible at solving certain environmental challenges may have very poor diversity metrics. And you see that all the time. And often we talk about also how ESG issues are highly contextual, right? So what matters to a cement company from a sustainability perspective is very different than what matters to an energy utility company or to a technology company or a healthcare company. But there are certain metrics that I think can be universally applied, and gender is one of those interesting ones, because there are several studies and meta-studies done at this point by Credit Suisse, by McKinsey, by a nonprofit called Catalyst, where some of them have looked at anywhere between 3,000 to 10,000 companies and investigated the correlations, not necessarily causations, but the correlations between the performance of those companies from a return on assets, return on equity, CFROI, cash flow return on investment, profit margins, and all of these metrics tend to look better when you are comparing it to companies that have higher levels of gender diversity, both in their board, but especially more importantly at the management levels. So as an investment firm where we are constantly looking for that little extra element of alpha generation and how we can differentiate companies, gender lens investing, I think, can be a very powerful way to identify companies that can have higher levels of financial productivity because of that advantage.
yeah, and Nina, I know you have also been looking into these things as you advise and work with asset managers. But any comments around the correlation between gender, DEI, and financial performance, or just ESG performance metrics in general?
Yes, sure. So I think it's a little bit of a difficult one, because I think from a normative perspective, we all believe that the right thing and the right long-term thing that will generate better returns will be diverse teams, DEI-focused investing, and all of these factors being taken into account by asset managers. And I think while we all know that this to be the case, there's also obviously all of these studies that try and show it with the data. I think one interesting one just out last month was this BlackRock paper where they've analyzed the representation of women in particular across different metrics. So the interesting part that they've come out with is that there's a medium of women representation, which is a sweet spot. They've also looked at women across different seniority levels within companies, saying that it's not only about executive representation, it's also about middle management representation, and ideally that mirroring the general, the women population within the company as a whole. They tried to look at inclusion factors maybe by looking from a firm policy perspective. So they took as an example how maternity leave policies are taken in practice. So median maternity leave taken, sort of assuming that would have an impact on sort of feelings of inclusion and employees feeling a sense of belonging maybe to the firm. So all of these were very interesting factors, and what they have found is that in their study this had a tangible impact on the financial returns of the companies. And I think this is great, and it has been widely cited because all of us want that result to be true and know it to be the right result. But I think what is also important in this context is to question, do we need to show an immediate result now, or can we maybe say this is like a capex expenditure for later on, because in the long term we know it is really important, and we should still be free, I think, to challenge some of the data that has been published. And we've maybe seen the Alex Admans, I think, has published quite a paper on this, a critique, which has been quite in a granular fashion gone through the data. So I think Still questioning methodologies and what are the right indices to be used, both on the diversity side and on the financial side. I think we should still have this dialogue and not be prevented only because we know from a normative perspective we should still go down that route.
Yeah, and I guess it also, as you said, there are some things we would like to be true and that we really wish for, but it's also we can invest for multiple reasons. We can invest purely for getting the highest return ever, and then we can also invest in a way that sort of reflects with our values. And I know this is one of the things that you are in general looking into, especially around next generation, given some of your comments earlier today.
Yeah, and I think it's very nice to tie it into the previous panel where Leon was talking about the consumer and the next gen, and Iris was talking about, I think she said, if companies don't get their act together, they'll be left behind. I think this is very much what is happening. There is a growing group that is actually more and more wants to invest based on their preference and their values. And so the question is, how can technology help construct the portfolios so that for those who wants to come in that direction, there is a portfolios for them to invest. But I would say, coming back to your point on the link on performance, we can spend a lot of time looking at the results and be stronger or smaller. I think what I would say is that with the next generation becoming more in power, it'll be very dangerous to exclude this dimension. And I think the reputational risk, the financial risk of ignoring this dimension will be increasingly bigger. And I think maybe if it's taken a long time for the climate risk to be priced in, I think the diversity inclusion risk will be coming in faster and faster. So I think there is one is the preferences, but it also the risk dimensions that will require people to look at that much more closely. And so I'm hopeful, I would say, as Leon was saying before, that things will change. We just need the next generation and the women to express more that voice, and then us from our side with technology try to allow that voice to be expressed through investment and flows.
Yeah. No, and maybe for the audience, well, now we've been talking about the correlation between the company performance and its financial performance, and some of the challenge that it has been around proving those 100%. But Mary Jo, I know you work a lot with, again, also getting more women into actually being fund managers and into the financial institutions. And I think there the results are actually more certain that women-led funds are actually performing very well. Compared to male-dominated funds, but why do you think we haven't seen a broader adoption of a lot more women fund managers, and what are the key challenges there?
Oh, thank you. Yeah. Well, there are a lot of challenges there. For one, the access to capital. So, getting women fund managers to run a fund. So there was recently a statistic in Forbes that came out that. Of all fund managers, portfolio managers of alternative funds, 12% were women. And of assets under management, and that only grew actually a 0.1% year over year. So growth isn't there. And then in addition, of the assets under management, women only manage 1.4% of that. And I think it's like anything, we're human beings and we continue to practice the same way we've practiced. And having people in those positions, I think it also becomes being a CIO of an investment firm for women is you're in that part of the track that you're deciding. There's a lot of things that need to be decided, and there needs to be firms that will support women who want to have families and want to have other things that they need to take on, and having that support system, which we don't necessarily always have for the, what do they call the invisible jobs that women do, or the unpaid work. I watched a interesting show on the way over here called the, oh my gosh, now I can't think of the name of it. I was going to say The Manager, but it's anyway, it's a great show that I can't think of the name of, but it was real, it'll come to me, but it was talking about this woman who, The Change. Sorry, now I do remember it. But yes, thank you. It's The Change. She was going through this period and she's writing down everything she had did as invisible work. And I thought, gosh, maybe we should have it where we could get a tax credit for our invisible work. And I was thinking your firm might be able to come up with how we could track that, and women could put it in, and maybe we could get something back on it. Since we're not getting equal pay, maybe we can get a write-off for our tax work. But I really think that supporting women in setting up in funds and having your, this is where I have the call to action here for everybody, because you're investors and we need investors to actually take this as something they want to look at. And when we can invest in women as managing funds and in managing those assets, they're then the ones that are going to look at the companies to invest in and see and provide, and they're going to take a lens of that as well. So I think if we can continue that and put our dollars when we look at our investment portfolios and call that out. And I can tell you, if you're in here and you're an institutional investor, please go to the 100 Women in Finance page to see all of the funds that are being managed by women and being supported, and look them up and look at their statistics, and start moving towards it. The other thing I just really wanted to say, though, is the size of the funds that women manage when it is a portfolio manager have generally been under the size of what our male counterparts have had. And with that, women don't get the larger allocations from institutions, so we need to be able to build that up. And a great example in Singapore, these women, it's called the Woman Fund. They've collaborated and found 6 of the top female fund managers to put together a fund-to-fund of women that's being supported by Sing Life. And anyway, it's a great way to then be able to make those smaller allocations and help build up their fund portfolio, as there's a limit to how much an institutional investor can allocate, because they can't do all this due diligence on multiple different investments, unfortunately. But that's one way we can take a look at that. So thanks.
Okay, thank you. And Justin, you're one of the men on this panel. We're two, so it's good that we're in a minority here. But yeah, you're also an investor and a company that sort of the group company Citizens. You do a lot of investments in general. But yeah, what are your thoughts on sort of this topic
Yeah, so I don't know if I'm fully qualified from a meta perspective, allocating capital to funds, but as a venture investor, we're looking at a more micro level, and what we find is it just makes sense to invest in diverse founding teams, whether it's from a risk management perspective, diverse viewpoints and experiences helps management teams see what's coming down the road. From an adaptability standpoint, both within the team and looking outward, diversity helps. From a stakeholder engagement standpoint, whether it's with investors or customers, diversity helps. Whether it is, when it's reputational, diversity helps. And then from a consumer standpoint, people tend to want to support companies that where people look like them and or where they see diversity, and so it obviously makes a lot of sense. As our venture firm, my partner is here from Future of. In our portfolio, about almost 50% of our investments, our founding teams, are women or BIPOC founders. That's not by design. Like, we didn't set out to do it that way. It just happened that way. And I think we make investments internationally, and I think as the world globalizes, people are going to come from, or people do come from so many different backgrounds that you have to be looking for the best ideas everywhere. And so, to be honest, I'm just learning so much listening to you and learning from everyone here today. So I'm honored to be on the panel, and that's my limited perspective on this topic.
But very quickly because again, 50% of your portfolio, that's very, very high compared to all other numbers, and you're saying it's not by design. Everyone else would say when they close their eyes and don't do anything by design, that's when we end up with the terrible statistics that we have. So don't you have any pointers, any advice that because you must be doing something right, since
I think great ideas come from everywhere, and I think talented people come from everywhere, and from all different backgrounds, and from different levels of adversity. And so I think it's I don't have any advice other than open your eyes to all the amazing businesses that are being built around the world by women, by people of color, and by people who may not come from the background that you come from.
perfect. Thank you. And just one final question. When you say diversity, what do you mean by diversity? Because again, 50% of your portfolio, that's very, very high compared to all other numbers, and you're saying it's not by design. Everyone else would say when they close their eyes and don't do anything by design, that's when we end up with the terrible statistics that we have. So don't you have any pointers, any advice that Okay. Yeah. No. But in some ways, you know, it's also about cognitive diversity, thinking about things differently, and this is where we all have different experiences based on what sort of DEI buckets we fall into, and gender, if of course, one of the big ones. But maybe you just touch upon it from a sort of direct investing into a direct company. Right. But Nikita, on sort of the work you do, because you are basically selecting what how to set up the funds, and who buy and who not to buy, and how do you go about that process?
I think I wanted to maybe touch on something I heard, where we often think about a lot of these issues as potential risks for investments, where you may have companies that don't have sufficient gender diversity as a risk. But what we have actually experienced is it's often much more an opportunity than a risk. And companies that are in this day and age, where most companies still have well below 50% levels of gender balance, companies that do have disproportionate number have been able to prove that ability to have cognitive diversity, to grow into new markets. And you've seen this in studies at the corporate level. I appreciate the comments on Alex Edmond's view on the BlackRock study, and that's why we need to be quite particular about which studies we look at and be critical about them. But there are sufficient other studies, as I quoted with Credit Suisse, McKinsey, and Catalyst, that are very well done and researched. But at the corporate level, companies that are able to have high levels of diversity, you've seen them be able to then take risks in new markets, new products, and there's research supporting that. So thinking about it as much from an opportunity standpoint, you made a comment about the women consumer. It's supposed to be almost the largest emerging consumer class, so greater than the consuming class of India and China is the consuming class of women. And just imagine directing product and targeting your marketing to this emerging class of consumers is very powerful. And on the other side, from a labor productivity standpoint, harnessing the power of women around the world is estimated to increase GDP by over 25%. Or just investing in tertiary education of women, especially in emerging markets, can expand GDP by 0.2% per year. This was a Goldman study done back in 2008, and the first number I quoted was a McKinsey study. So the opportunity is significant, and discovering companies that are able to think about it from that lens, especially in certain industries like the consumer packaged goods industry, where we've seen particular companies that have been able to take advantage of focusing on the female consumer, are tremendous from an investment standpoint.
But I guess it's good news to hear that as an investor, you're thinking a lot about these things and are then directing capital towards those that you believe are the winners of the future on this. And maybe a quick point on the analysis of the ESG funds. That was quite interesting, and maybe leads to a question for you, Carolina. It was really fascinating to see how of these hundreds of ESG funds, the best performing funds had zero exposure to companies that didn't perform well on gender or DEI or race, ethnicity, and the worst funds had almost 60% of their money to the lowest performing ones. So there was a huge difference between these type of funds. But again, I'm not sure that all investors are aware of these type of choices, and again, where they can go in and vote almost with their money. But I know, Carolina, this is one of the things that you are sort of working more towards, giving more options to more people.
Yeah, and I think to Nikita's point, I think when we are talking about the change of behaviors for the next generation, and by the way, we need to figure out a way of getting the women more into that, because of course, as I was preparing for this panel and I was reading about and looking at the data, you can see there's a lot of similarities between the spending of women and the spending of the next gen. And of course, the next gen will inherit money. According to PwC, in a few years, they'll inherit 68 trillion. The women already have the money. So the first question is, how do we bring them into it and how we engage with them? But I think as this money flows in that direction, this actually will drive valuation. And I think one of the things that people are not appreciating yet is today portfolios are constructed on country and sectors, but the risk dimension or the return dimension, Nikita, you're saying, from the things will become more and more important. So actually going forward, we'll see that portfolios will be constructed more along those themes. is a journey, right? And so what we're doing on our side is bringing technology and data like yourself, to make it easier for that voice that is coming to, starting to become more expressed, to be channeled. Because as soon as it gets channeled, the more we'll feel that pressure. And so that is exactly why I came out of my world where I didn't have the new technology to go and look for it, connect with the technology, and then try to activate that voice. I think this will be very much a dimension for change that will really help a catalyst for change and for those values, these SDGs that we're talking about. It. How can people can invest according to these SDGs?
Yeah, and Nina, maybe since you're coming from a law firm and a sort of a helping asset managers, are you, again, when I think law firms in general, it's all about risk. Could you maybe tell us a little bit more about sort of more of the tangible and where you see the opportunities, and is it all risk and your day-to-day work in this space?
So I don't think so. I think from a law firm perspective, we are trying to obviously help our clients achieve outcomes in the first place. And yes, partly that will involve sort of risk disclosures. And on the EU regulatory side, for example, there are obviously some mandatory disclosures in relation to ESG that we have to think about. But ultimately, I don't think risk is the primary concern that we're thinking about. I think we're trying to explore opportunities together with our clients. However, the other big topic that law firms deal with, and which is not risk, but people find just as little fun, is compliance cost and sort of methodologies for compliance, etc. So I think, but I think we have to look at this also from an empowerment standpoint. So I think knowing that investors want to achieve certain outcomes, knowing that asset managers want to be investing in accordance with approaches which are in line with the criteria we're discussing here. All of this is only really possible if a few things are in place. And one is standardization. One is something to really making the data available to measure what we're actually doing. And I think AI and technology will be one of the biggest drivers for this. So I don't really see how we can have such complex portfolio decisions being taken sort of manually. We really need AI, we need big data to enable this. But the question is also, from a legal perspective, do we potentially need regulation? Do we need standardization? Or can investors and the market do this themselves? And there may be different approaches to this, but I mean, EU taxonomy has proven a good, at least an attempt at standardization only in the environmental space. Question is, can something similar or should something similar be achieved also from the S factor in ESG? Is it maybe also more complex, given that some of the factors are very intangible, and in particular the inclusion part? Diversity might be possible to be measured, how many people are there on the board, but how included are their voices heard, etc. So all of these things are stuff that we have to think about, and maybe regulation and lawyers are quite helpful as a tool for that.
No, thank you. And yeah, the sort of the whole SFDR mislabeling of funds, regulatory focus is I guess, a topic in and of itself. But yeah, we are running out of time already. But Mary Jo, any concluding remarks for you on what do you think we need to do here in order to get more funds allocated to women?
Talk to your daughters and get them involved in their finances. It drives me crazy when I hear women say, "Oh, I don't do math and I don't do finance." It's like, well, you do spend money, so you do know what to do with it. So spend a little more time on it, get them interested in it, and really just take a look at what's out there. And I think it's about just being mindful. I think when we didn't realize what, I think someone the other night said, when we didn't realize the number of calories that were in our soda, we drank more of them. If we, once we realize how few women are in the asset management field and managing funds, and we can look at that and actually peel back the onion and take a look inside, I think we can start supporting more women with that. And I'm just really impressed, Justin, with what you've done in the venture field in supporting women founders, because that's such a field that isn't being supported. And in the venture capital world too, venture funds for women, only 2% of capital, overall asset management, but only 2% of capital goes to women in it. So I feel like if we could just continue to focus, and life is about balance. Ray of light, when Ray was talking earlier about things, so if we just look at the yin and the yang of things in life, we should have men and women balancing portfolios and things. So that's what I would take away with. Thank you.
But Justin, yeah, and you have the balance. You said 50-50 right now in terms of investments you made in women and in male-led companies. So
I said in women and BIPOC-led companies. So.
But yeah, any closing remarks on
if we're talking about gender equality if we're talking specifically about gender, just keep encouraging girls to get involved with STEM. You know, the more I see young women who are coming out of about some background in the STEM fields, the more excited I get about the future of women founders, and that's my 2 cents.
Yeah, Nikita, final words.
I think they've done a great job. I don't know what more to add. I think as Mary, as you were saying, the thinking about also women managing funds as a diversification play in your portfolio, that's something I really think is a unique way to add a gender-based fund in a portfolio and you're allocating to. Certainly, at some point, it will not be a niche allocation and it'll be mainstream, but today as a way to think about if all your portfolios are managed by a certain type of individual that looks the same, are they thinking the same way about risk and return? And if you can have a different kind of manager manage your portfolio, I've witnessed this personally as being on the management committee of my company, and on the investment management committee, I'm the only woman, and I do tend to have a slightly different perspective. Unfortunately, I'm confident enough to voice my opinion, but it often takes more than one woman. You probably need 2 minorities at least to support each other, and then you can voice your different opinion. You see that translate to companies avoiding their blind side, and you tend to take more measured risks. You tend to think about differentiated opportunities, and I would liken that to your investment portfolio if you invest in more diverse managers.
Yeah, and Nina, we are out of time, but any quick final one point?
So now we've been looking, I think, at gender a lot, and I think that's important. But as the usual, I think, caveat, it's important to look at gender, it's important to look at ethnicity, but I think it's important to also not forget the other diversity factors, especially the ones that might be harder to measure, neurodiversity, socioeconomic backgrounds, because if we only diverse in one category, then maybe we're actually not that diverse at all.
Yeah, Carolina?
Very quickly, I was going to say the same thing as Joe, but I think the question is we need I think to change the all belief system. And so we need allies. So I'm honored to have the 2 of you here. That is very important for breaking with the mold of the belief system to try to bring, as you're saying, Nina, more inclusivity, not only women, bringing what I would call the periphery into mainstream, to help bring a change into the way we invest. And that for me is critical, and any help we can get from yours and guidance will be very welcome.
Amazing final words, so I'm not going to change that. I'm just going to ask the audience to please give a big hand for the audience for the great points.